All right, so let's go out to the Dow Jones. Dow's pulled back down into a potential head and shoulders top setup. We'll drop in the dailies right here, neckline. And again, you see we had multiple closes below. Disrupts the pattern. Here's the left shoulder neckline. Head, retest of the neckline. Outside return to the aggressive sell point. 618 retracement of the last leg of the move right here. 721s. Let's go identify the left shoulder, which comes in around 13,800. Okay, so it's going to require a 300-point stop with the 800 sell. Let me pull this down. There we go. So the 13,800 sell here, if we get the rally back into that price point, stops have to go at 14,105s above that swing high. And then so you see there would be 300 points of risk. Move back down to 13.4. The neckline support right here would be the target, 400 points of reward. And again, obviously options at that point, the diamonds at that point, if you're an equities trader. Again, look at this pop in volume recently. Okay, so there's the Dow. Now, also on the Dow Jones, all these indexes, these again are going to be big impulse legs here for an overall pattern sell. Now, let's just look at the current price action and run an if-then scenario. Okay, so that would, the rally right there, let's say we come up to the 721s and hold. Then we pull back to a 786 retracement of the A to B. Then we copy-paste the AB and look at AB equals CD. Right there would be a huge monster pattern sell just slightly above the double top left shoulder. And then the expectation would be this right here. Okay, back down below Dow 13,000. So there's the Dow Jones. We'll watch that. Now let's drill down here quickly, 120-minute time frame. You see on the 2 hours, just shy of an inverted head and shoulders pattern here. Again, what has recent price action done? Inverted left shoulder, back to the neckline. Inverted head. Bam, right there's the retest of the neckline. Now, the possible right shoulder, right down here, 120-minute. Let's take it to a 60, pull in more data, and I'll tighten that chart up for you. Okay, so again, I want you really to focus on that chart. What has price action done? See how this is a bear continuation pattern? So this would be an inverted head and shoulders bottom potential. Let's come in here and draw this in. There's your neckline. Okay, I want to copy it and I want to drop it in at the left shoulder. So you see, this is the retest of the neckline. That's the setup. The signal is right there. And then the expectation, we'd look for the 1-to-1 measured move. This is going to be a buy down around 13.3s. Okay, 285s, a point of confluence. The 618 retracement of the lows at the head to the neckline meets the left shoulder. Double bottom structure support. Last time we hit this area, we popped back up into that pattern sell. Here's the pattern sell. There's X down to A. Retrace, and again, we didn't really get an extension. It was an ABCD pattern sell. And again, great symmetry around the market right here. Okay, so good opportunity to watch that. Now, obviously, if that does pull back down, then should get the correlated price action in the S&P, which means that the S&P would pull back down into profit targets on the pattern sell that we've discussed here. Okay, so here's the S&P 500. Pattern sell completed. This is the bottom part of the offer zone. Look at the hourly candle. Huge pop. We saw 100,000 contracts come in about 10 minutes, 8 minutes. Went to 416,000, made a higher high intraday, could not close it above that 1478 sell. And now you see a clear pattern and with a sideways channel. Okay, firmed up at 65s, resistance still holding at 77, 78. So, the pullback on the Dow we just looked at for the inverted head and shoulders buy, correlated price pullback here would drive into target 1 on that pattern sell. All right, now back into the indexes. Okay, so Dow, potential qualified signal there. Now let's run out to the mini Russell. Okay, just shy of an inverted head and shoulders pattern. DST clients, bear, continuation, perfection. lower low followed by a lower high. Retest of the low or a new structure low. Outside return, lower high. Lower low, lower high. Lower low, lower high. Retest of the low, new structure low. Lower high. Retest of the low, impulse. Higher high, higher low, new structure high, breaks back down. No real visual price pattern over here on the right side. Let's go out to a 120-minute time frame. Okay, so again, let's look at this. Well, here, let's just look at dailies. Man, that 824 right here that we talked about for so long seems like forever ago. Okay, so remember, we had identified that sideways channel. Some of you swing traders were just nailing the 24s against the 60s and enjoyed the prosperous channel trade. Okay, now once they took it out right here, let's go ahead and identify the swing low. We're going to come now down to a 120-minute time frame. Okay, so here's the break below right there. We made the new structure lows. We got lower lows, lower closes on a 2-hour, lower high. Remember, we saw this intraday last week, 824s. And from that point, pretty nice 50-point move. Now watch this. We'll go back into the 240-minute time frame. Okay, previously we identified the width of that channel. Minimum expectation, 1-to-1 measured move. They did that in one day. And then drove down through. And again, watch the fib extension. From the swing high, there was the break. We pressed to this structure low. Market then rallied right here, lower high, 127 projection. Okay, and now slightly lower low. So again, let's take this swing right there prior to that new low in the market. We want to measure that leg. And now you see the 127 projection of the last leg showing Ratian confluence with the 1618 projection, and that was the initial impulse move right after we took out that significant support. Okay, so 755 to 760, good extended targets. If the 798 holds. Obviously, if they break above it, then we'll look at pattern buys, aggressive bids at C, leg on the way back into the 840s. Okay, and then finally, let's go back out daily. And look at Nasdaq. Okay, so Nasdaq pulled back down. Again, structure support still holding. We talked about those bids at 1955. Take the swing low right there up to that structure high. 786 retracement. Again, yesterday we had the drive through. Pretty bullish candle right there. Closed top 5% of the candle. Now we see bigger volume today coming in. And again, new recent highs here in the Nasdaq. Now let's drill down, 120-minute. And a potential inverted head and shoulders here. See this? Left shoulder, neckline, head, not back to the neckline. DST clients, watch this. What do you see right there? Look at that beautiful visual pattern. Here's X to A, followed by retrace A to B, extend B to C. Where would AB equal CD terminate? Okay, so there's the 1-to-1 ratio. Notice right here, the extension of A to B. Okay, so right now, just like we saw in the S&P 500, at the bottom part of the offer zone. Okay, so the safer, more conservative, 1989 sell stops at 2014 50s. Okay, you see 1-to-1 measured move. That symmetry terminates right there at the 786 1618.